Hello, welcome back everyone to Commodity Trader, and I'm Subhash with you with another episode of Crude Oil. I hope all of you enjoyed last week a video where we discussed all the possible support and resistance, and I believe you have taken trade accordingly and avoided possible risk of wrong trades. And this week again we will look at some pros and cons and what are the obstacles crude prices facing at the moment. And I have shortlisted as usual some of the major concerns right now, and we will check one by one. And one of the major reasons I find is a Libyan pumping of oil, since they have reached a truce or a understanding with the sepatriates. The oil output from Libya is much more, and it's creating a panic in the market right now. It's affecting the crude prices. And secondly, the presence of COVID situation or throughout the world. I mean, I think the Europe, throughout the Europe and America also, it's spreading like a wildfire, and it's quite an embarrassing moment for the whole world. Like, everybody's looking at this situation in a very painful and fearful way. So we have to wait and see how things pan out. I mean, the vaccine will take its own time, and we cannot depend on the vaccine right now. So it's all depend on how people behave, like the social distancing, and how the government going to implement the lockdown. So it's take its own time, and we cannot expect any immediate result or immediate turnaround on COVID cases. So delay. Another thing is the delay of stimulus. Stimulus, of course, there is a big hope of stimulus, and stimulus can take the prices to another level. Like it can give a spontaneous, like a sudden pump in crude prices. But stimulus again is it's a cliffhanger, because even if it's approved, it needs a lot of hurdles. It has to pass through the Senate. So it's again, people are skeptical on stimulus, and if everybody is expecting this to happen before November 2nd. And okay, this is the delay is going to hurt the market again, once again. So this one another issue. And the rising gasoline inventory, this was from Tuesday. The inventory of gasoline suddenly shoot up, and it's going to be worse in the coming days, for sure, because the Europe and Europe especially is in a lockdown situation, and it's not going to support the demand, which is the fifth point. The demand graph is getting worse, and it's deteriorating on a daily basis. So demand is going to be much worse in the coming weeks. And Biden, in his last debate with Trump, has emphasized on his he's against the fossil fuel, and is not going to support, which is the real bad news for the oil industry as a whole. And his statement will boomerang oil prices in a big way. These are some of the obstacles I find for the next week. And the positive side, the first point, I'm skipping it because Shell produces, which we discussed last video. You can just read it. Others if they have watched my video, they will understand. And the second point is a major point is Russia. Putin has given some fresh hope. Like he had a statement, like he have given an assurance to the world, like if the COVID situation is escalating in coming weeks, he will opt for more cuts, which is a good sign for the market, and this will protect the price, or it will the prices could stay if we prolong the cut or improve the cut in a big way. So Russia has given some fresh hope for the market, and his statement has given an assurance as far as prices are concerned. And the Far East Asian countries, especially India and Singapore, has reinitiated the flights, which will and even the other countries, Far East Asian countries may follow India path. And if the flights are reinitiated and re-established, this will improve the jet fuel consumption, which is a very good news for the market. So let's jump into the chart, since we have to cover up the dollar charts and the Indian MCX chart. So we'll go for the dollar chart first. You can see the prices of crude has been stagnant throughout the last week, and as I told you, we discussed because the prices were traveling from 63 to 39.5 to the downside, and it was back and forth during the last 1 week, and it's quite frustrating, and it gives a lot of false breakouts. As you can see, it always cross 4063 and it will give a false breakout, and suddenly it will take a downside deviation, and it's very hard for people to take trade. And amateurs, I will ask them to keep away from the market, keep aside for a while until the elections, and or any other or some firm, or like a some positive news comes from the market, or prices get steadied, until then people better keep away from freshers, keep away. And experienced traders also do not take trade in the middle. For example, here in the CPR, when you take trade, we don't know which way the market is going to take a turn. So it's always better. For example, now market is on the downside, but this downside, I'm sure, in the coming weeks can break down, because the bad news are overcapping the good news. Even the stimulus good news comes, we can expect prices to touch not 44. I'm sure it can travel to 41.73 or 42. This is the best I expect. Even if it touch 44, it's not going to stay for a while. It will take an immediate U-turn from 45, I'm sure. So I don't know, stimulus can help for a while, that's it, and it can come down again back to these levels. This is what I expect, and until the COVID situation change and the demand rises. If demand rises, of course things are going to take a different dimension. Of course it can even cross to $45. This is what we expect. So if prices crosses $42 with a stimulus good news and COVID under control situation, if the COVID situation changes, if the Europe come back to the normalcy, then of course we can see $45 very soon. But it will take its own time, because the COVID situation, as we know, it's not going to be curtailed or cannot be controlled at the moment. So vaccine will take its own time. So we have no good news at the moment, and there's no hope of a good news in the coming weeks. So we have to wait. I think we are going to see from here. So this is a Friday closing of 39.68, and we are going to see much downside like a 36.90 very soon. This is what my expectation is. And in the middle there is a 38.7, which is a major resistance, support. And if this is a major support, if it breaks, markets breaks, means it's going to be a big slide downside, and we can see 37 and 35.71, which are the major, which we touched during the COVID months. We have seen 35.71 and 37, which we can see immediate. And on looking at the dollar chart, MCX chart, again, this, as I told you, we are here like a 29.35 or 29.25, which is a Friday bottom. And from here, I'm sure next week we can see 2881 immediate, and from there 2866 and 2843. These are the major support right now, and it can fall just a matter of time. We can see these levels, and further, of course, the major supports or big supports like safe entry points, I would call it. If it reaches 2672 or 2758, I would say, I would love to enter, and I will I'll take even the December or January contract. If we are in end of November, we are reaching this 2672. Which is the $35 point, 2672. I will take a January contract, like a long term. I will keep this in my wallet for a long time. I will make an entry here, and for a long time until. But these are intraday levels like 2866 or 2803 rather. 2803 is a very good entry point. You can see here in October. 5th of October, we touched 2806. 2806 is a very good entry point, I would say, for intraday players. Like we can keep for weeks. We will get a sudden pop-ups here. If it touches 2803 and all, we can expect 80 point, 100 points from here. So upside. So these are good entry points, good support levels we can watch for coming days trade. and a major level for long term or a safe entry point would be 2672, but I don't know whether the prices can take to that point. I don't know, because as I told you, market won't allow that, like Putin's statement of more production cuts will allow price to stay maximum of I think maximum we can see is 2805. I mean, we have to be lucky to get that entry point, and I will advise you all to take a position there and make utilize of situation. If you take a look at the Fibonacci levels, which I have drawn for you, Fibonacci also gives us some retracement levels. Again, 2803, you can see the major, but you can see what is surprising. You see the silver line 0.618, 2931, exactly it respected. You see, if you take a upside of Fibonacci on 3138 basis, like for example, as I told you, if it breaks, for example, $42, and if it travels upside, you can easily see 3116, which I have not. I mean, I will put a line for you to show you where. Yeah, 3116. These two levels, immediate resistance we can see 3116 and 3139. So taking these two levels as Fibonacci points. When we draw a line from 2803, I was surprised to see 0.618, exactly the closing on Friday. See, exact closing on Friday, and this shows that these levels on Fibonacci are much dependable for next week trade. And I'm sure if you buy, make a point, note of these levels, it will help you a lot in trade in the coming weeks. So these 2875, next level is 2875, and again 2803, as I told you, these are the major supports as per the Fibonacci. Make a note of that. And upside, we already have seen 305159. Again, see how precise the support has been, resistance has been taken, and from there the market has been reversed. And this 2971, see, there has been a lot of trades have happened in this middle portion, which is a pivot point or CPR, I would call it. So this 2838 closing on, and this 2931 to 2925, where the support was taken on Friday and Thursday. So these are areas where we have to again concentrate on Monday. Once Monday, if it opens again, I believe it will open in this territory of 2931. And if it breaks down, the momentum is downside, means of course 2875 you can see. So take a short position here, because there is a lot of bad news for next week. At least for next week we can safely take short positions, and I believe market won't go back to this 3059 level very soon. So please, as per this Fibonacci and other levels we discuss, trade looking at the levels. This is very important, and apply strict stop losses. Okay, so as I told you, safe traders can take a position downside, and 2672, as I told you, or you can see here, as per Fibonacci, it can come to 2600. So these are levels for long-term players. For example, long contracts, 1 or 2 months contracts ahead. I'm telling you, you can buy and keep in your hand. I'm sure it will give you 200-300 rupees easily upside. So all of you, hope you enjoyed my videos. People who have not liked my videos, please press the bell icon and subscribe. I request once again, because I am short of numbers. Hope you all enjoy my video, and I will see you very soon, okay, with some development happening in the crude. Okay, thank you so much. Bye-bye.